Nigeria's Diamond Bank is in talks with Oceanic International, one of the 8 rescued lenders, over a possible acquisition. This following the breakdown of merger talks between Oceanic and First Bank earlier this year. We cross now to Lagos, where Abdulrahman Yinusa, CFO of Diamond Bank, is standing by with the details. Thanks so much, Abdulrahman, for joining us today. Well, Diamond Bank mentioned, as I said, as one of the 3 banks interested in business consolidation with Oceanic Bank. Run us through the rationale and the investment merit as you see it.
Well, thank you, Alicia. I think we'll start by saying that there are 2 banks, and there is also a private equity firm that is at this point looking at a possible investment opportunity in Oceanic Bank. You will recall that a number of institutions had shown interest in the past, but there was a lack of clarity as to how the hole in the business of the rescued institutions are going to be filled, are going to be sorted out. But I think with the clarity being provided by AMCON over the last few weeks and last few months, we now believe that there is some possibility of having a business combination. You do know that Oceanic Bank, has quite a large footprint in terms of network of branches, and you also know that Diamond Bank is very good when it comes to retail business. So we believe that it's going to be this very strategic fit between these 2 institutions.
So it's basically the clarity that's come to the fore within the banking sector and the health of these banks specifically that has prompted Diamond Bank to make a U-turn from what had previously been its position that it would shy away from links to M&A talks and these rescued banks specifically.
Yes, I think you will recall that in 2009 and then some part of 2010, when the issues were being discussed, there was actually no clarity as to how the negative shareholders' funds that brought the rescued institutions to where they are is going to be sorted out. A few options were considered, and I think in the last few months, we now know exactly where we're going. And with that confirmation, and of course with the withdrawal of First Bank from that particular transaction, there is now room for other people to go into that transaction, and that's for we're trying to look at it. But recall that as an institution, we do have our strategy for organic growth as well as inorganic growth, and this is just one option that we're just looking at this point in time.
Some analysts, however, have noted some concern about Diamond Bank's capacity to actually do this deal. An analyst we spoke to earlier today on Open Exchange saying that Diamond Bank's capital adequacy ratio at 17% is amongst the lowest of the healthy banks, and implied that Diamond Bank may not have enough capital to absorb a bank the size of Oceanic Bank. So let's put your muscle and your capability under some scrutiny here.
Okay, you're welcome. I think the issue about capital adequacy, the first thing you need to recall is that we are not likely to be considering a cash purchase of any shares in the target institution. We are going to be issuing shares on one hand for exchange for the shares in the other institution, and that by itself actually creates more capital for the institution that we're talking about. That's on one hand. On the other hand, recall that our capital adequacy of about 18% in terms of the bank is already almost twice what is required legally. The legal requirement for your records is 10%. So if we're already doing 18%, I think that gives a lot of room for possible use in other ways. But beyond that, we do believe that there is room to actually do either Tier 2 capital, which we talked about when we were looking at our first quarter results a few months back. And of course, that is still on the table. And if there is need be, you can always go out there and do capital issue as long as you have business that justifies that. But at this point in time, we think 18% capital adequacy is more than enough to start this business.
Just very quickly, a one-liner, how soon will you be able to confirm a deal or not?
I think there are too many parties involved. Like I said, we are just at the very preliminary stage of doing due diligence. So when we are done, of course, we'll make our bid. The regulators, the bank itself in question will also go back to their board, and there will still be quite a number of steps to be taken. So let's just say that this is just an indicative intention at this point in time.
Well, we'll be keeping an eye out, Abdulrahman. Unfortunately, we're going to have to leave it there with that conversation for today. Thanks so much for your time. Abdulrahman Yinusa is CFO of Diamond Bank.